All right, Krystal, what are you taking a look at?
Well, we all know what it's like to see a housing bubble burst, the decades of pain and dislocation that destroy economic lives as well as human lives. If you're my age, you know what it was like to see a dot-com bubble burst. What would it be like to live through multiple massive bubbles bursting all at once? Well, we might be facing down exactly that type of horrific economic cataclysm right now, according to one analyst who predicted the past two crashes to a T. Before we get to that, however, here is the latest. Markets are on track to post their worst month since the bottom fell out during the pandemic back in March of 2020. Yesterday was a total roller coaster. The Dow dropped 1,000 points before somehow mounting a comeback at the end of the trading day to close in positive territory. But most analysts are predicting that this sell-off is going to continue. Why is this happening now? Well, as we've been warning here, the Fed is pulling the plug on the stock market party. Jerome Powell's Fed has signaled that they plan on hiking interest rates and trying to climb down from the massive spending binge that propped up both the debt and equity markets. They'll have more to say Wednesday after they meet, but with inflation continuing to mount, I would not expect them to change course. Markets are adjusting to the potential end of the free money era and the potential end of the policies that provided a multi-trillion-dollar safety net for the richest among us. That all means there will be pain. It's just a question of how much, how widespread. Because while the gains were concentrated in the hands of a few, the losses could well devastate millions. And one guy who was right about both the dot-com bubble and then right again about the housing bubble is now saying, we ain't seen nothing yet. Jeremy Grantham, British investor who has a near impeccable record where such things are concerned, is sounding the alarms. He believes the U.S. right now is facing down not one, not two, but 3.5 super bubbles, all set to burst with potentially catastrophic consequences. In a post titled, "Let the Wild Rumpus Begin," Grantham lays out his case that we are currently in super bubble territory in housing, in stocks, in commodities, and a half bubble in bonds. Effectively, when the Fed was handing out free cash, there was a rush for the rich to put it somewhere, anywhere really. This led to record-breaking stock gains, massive spikes in asset prices, and everything from art to wine to yachts to fancy trees to NFTs to fake real estate in the metaverse. Closer to home, well, it led to huge spikes in home prices, with investors rushing in to buy single-family homes and pricing ordinary home buyers out of the market altogether. Crypto has been another major beneficiary of this exuberance. The huge spike in cryptocurrency value coincided with the Fed's extraordinary moves to prop up the market during COVID. And now that the Fed has signaled their intent to change course, crypto was among the first assets to see a huge drop. Bitcoin jumped up 305% back in 2020 under the easy money regime, but over the past few months, it is down by about half. Overall, in just one day, the cryptocurrency market lost $130 billion of its value. According to Grantham, the signs of these super bubbles right now are everywhere. Housing costs are at the highest multiple of family income in history, meaning that homes are less affordable than they have ever been before, including before the great housing bubble crash. The stock market soared during the pandemic, even as millions filed for unemployment and pulled the family minivan into a modern-day breadline, fueling a belief that nothing could ever cause the market to fall. And commodities like oil, metals, and food are broadly overpriced, leading to inflation and stressing real incomes right as the bottom could be set to fall out. Take a look at this. Grantham also argues that we've already run through the traditional life cycles of the super bubble. He writes that in past super bubbles, shortly before they burst, they actually go through a period of acceleration, which we saw mostly in 2020 and early in 2021, when the NASDAQ skyrocketed 105% from its COVID low. Next, the most speculative assets, things like crypto, begin to fall even as more traditional blue chip stocks continue to perform well. The final phase he describes is the psychological dynamic that I mentioned before, a sort of quasi-religious belief that the market can only possibly go up. By the way, that was kind of true so long as the Fed was pumping trillions into the markets. But now, that music has stopped. Looking at history, previous super bubbles have all ended, of course, with economic devastation for the masses. These bubbles caused the Great Depression. They caused the massive Japanese crash that led to the lost decades, the dot-com crash, and the Great Recession after the housing bubble crash. If Grantham is correct, we are in an even worse position than any of those scenarios because we're dealing with super bubbles in almost everything. Of course, there are massive, unpredictable political consequences to this possible calamity as well. Think about how the housing crash led to Occupy, led to the burning campaign, and on the other hand, led to Trump in a nation that at times has been a literal tinderbox. Some of those outcomes I consider to be actually good, but under no circumstances should you cheer for this kind of chaos. Does the state of the country today seem good to you? This is why the accelerationist argument fails. You are much more likely to get a worse Trump and a more dangerous insurrection attempt than you are to get a better Bernie actually able to win and rebalance the scales. As Grantham writes, looking back in a decade or two, if bad things have happened to our democracy, the huge surge in income and wealth inequality of the last 50 years as CEO income moved from about 25 times the average workers to about 250 times will have carried the largest share of the blame. Just think about all the horrors that we track here today. The core rot, deaths of despair, fears of a civil war, and increasing comfort with political violence. So much of the acute pain and misery in the nation right now goes right back to the financial crash. What would another even worse crash look like, piled on top of all of that compounding instability? It is not a thing that I wish to find out. To be sure, while Grantham's got a good track record, he could certainly be wrong this time. The Fed could lose its nerve and go back to inflating the asset bubbles instead of pricking them. That's kind of a dubious thing to wish for, by the way. Maybe the market moves through this correction without major calamity and we continue muddling through. I sincerely hope that this man, as prophetic as he has been at times in the past, is dead wrong this time around. I literally can't imagine what might become of the nation if he is, in fact, correct. Hey guys, thanks so much for watching.
That's right. Just as a reminder, you can become a premium subscriber today. Watch the full show completely uncut, our reactions to each other's monologues. You get to listen to it. You get to ask us questions, all that good stuff. Link is right there in the description or at breakingpoints.com.
Best of all, great way to say screw you to the mainstream media.